Hey guys, Omar Khan here with Theta Trading, and today I'm going to show you a game changer strategy, in my opinion. The answer to the question of the thumbnail is, can you generate income on your phone? The short answer is yes. Yes, you absolutely can. And I'm going to show you exactly how to generate income on your phone anywhere in the world. 30 minutes a day. Once you get up to speed, you know what you're doing. Okay. So I'm going to go ahead and share my screen. Now we're going to generate income on our phone using our knowledge and learning how to buy stocks cheaper than they're currently trading for. Now, the first thing that we're going to look for is stocks that we think will be worth more in the long run than they are in the short term. So I'm going to go ahead and share my screen, and we're going to do a live trading demonstration of this. Okay. So we're going to look at all kinds of different companies. Now, you could be a more conservative investor, you could be a more aggressive investor, but I want to show you what to look for when you're looking at implementing the strategy. Okay. So sharing my screen, and I apologize, it has to be done on my phone. But when you're doing the strategy, I trade all of my portfolio on my screen. And the vast majority of people I know actually trade everything on their phone. They don't trade on their desktop or their laptop or something. It's all done on the phone. That's a great thing about the strategy, is because you can implement it anywhere in the world. Now, this is Interactive Brokers, okay? This is the platform that I use. You can use any platform you want. We have no affiliation with this company. You can use any platform that you wish. Now, here is a sample account of what we started 3 years ago. So I'm going to go back here, and this was started a little bit more than 3 years ago. Sorry, it was started at $1 million. Doesn't quite show the exact amount, but it was $1 million on January 1st of 2023. It has now grown to almost over 2.3 million, as you can see in the top left-hand corner. So how do you generate those sort of returns while still being responsible in terms of your risk profile? You don't want to take too much risk on, okay? And the first thing with risk is, what you don't want to do is you don't want to use more money than you have. So when you're trading and when you're investing in options, you have to open up something called a margin account. A margin account means that you are able to trade with more money than you actually have. And that can get very, very tempting. We do not want to do that, because that will get us in a disastrous situation eventually. Because the markets do pull back. That is not the place that we want to be in. Okay. Now, that being said, what do we actually do? Well, we only trade with the money we have. So if you have $100,000 account, $50,000 account, a $10,000 account, or a $10 million account, the principles are pretty much the same. The first thing that we do is that we look for a company that we think will be worth more in the future. The second thing we do is that we don't want to invest more than we actually have, because, again, that's very possible when you have a margin account. So I'm going to show you a sample trade of how this works, okay? So I'm just going to show you one quick sample trade, okay? So here's a company that's been in the news a lot of late: Advanced Micro Devices. Okay, I'm going to go to a 1 year chart here, and you can see the stock on the top left-hand corner is currently trading at $450.64. Great. Now, we have to do our homework ahead of time. At Theta Trading, we provide that homework as to where we think this company will be worth in the future. And spoiler alert, we think it'll be worth a lot more than 450. Okay, so if we think it's going to be worth a lot more than 450 in the future, well, how do we generate income on our phone knowing this? What do? Well, we go to the options market. Okay, so this is the stock. I hit this tab here, and this is the options market. Okay, so what I'm going to do here is I'm simply going to agree to buy the stock, not actually buy it, just agree to buy it. I'm going to agree to buy it for $450, pretty much what it's trading at right now. But I'm going to agree to buy it on or before June 5th. Now, I can change the date, as you can see on the top here. I can change it to whatever date I want. But there's a very specific reason that we're sticking to this 22 days. We might do 29 days, but generally speaking, we won't do beyond that, okay? So I'm going to go with June 5th here. And I'm going to agree to buy it for $450. That's how you generate income on your phone. You know you want to buy Advanced Micro Devices. You think it'll be worth a lot more, and we'll help you with learning how to do this understanding and research and understanding. Well, ultimately a stock will go up or down based upon its revenue and earnings, more importantly. So the more money a company makes or doesn't make will determine the long-term value of that company's stock. Now, there are very short-term things that can affect it, like a war, um, interest rates, inflation, things like that can affect it short term. But in the long run, and I mean by long run versus short term, like nobody knows what the stock market's going to do in the next year and a half, 2 years. Nobody knows. Even like 3 months, nobody knows. But what you do know is this: you have a pretty good idea as to what a company is going to be making 2 years out, 3 years out, 5 years out, and that will help you determine what the stock price is going to be. So the first thing we've done, and we'll help you with this, is understand where will this stock be in a number of years. Okay, so for us, it's a lot higher than it is right now. Okay, so now if we know it's a lot higher, well, do we mind buying this at 450 between now and June 5th, which is 22 days? Well, 22 days. Okay, so let's see what sort of return we get for 22 days. Well, it looks like we're going to be almost $29 a share. So I'm going to go ahead and put this trade through. So what am I doing here exactly? I'm telling the market, okay, the market says, if you look at the top left-hand corner, the market says this stock is trading at $451.26. I have two choices if I think the stock is going to go higher. One is, if it's going to go higher, great, I'll buy it and I'll wait for it to go higher. But I don't think that's the best way to do this. The best way to do this is if you look at buying this, and again, this is, my opinion, and this is not meant to be considered financial advice, but this is a game changer strategy, in my opinion. Okay. If you think the stock is headed higher, would you mind buying it for $450? Probably not. Even if you had to, would you mind? Probably not. So what I'm going to do here is I'm going to agree to buy the stock for $450. And so I'm going to go to this call and put section on the options chain. And this is how we use options. And we're going to use, again, whatever date we want here. I'm going to say, you know what? And you can pick whatever price you want. You're like, I don't want to buy it for 450. I want to buy it for 400. Okay, great. For 400, you'll get paid roughly $9.90. But I want to be a bit more aggressive because I think it'll be worth a lot more in the future. So I'm going to get paid $28.70 for the next 22 days just to agree to buy the stock. Now, the worst thing that'll happen to me is I'll have to buy the stock, which I'm totally fine with. So I've gone ahead and entered that trade, and we're going to wait for that trade to go through. Okay, right there, just went through. So I agreed to buy Advanced Micro Devices, AMD, between now and June 5th for $450. Now, one of two things is going to happen. Either A, it'll go below 450, in which case I'll have to buy it, or B, it will not go below 450, in which case I will not have to buy it. But either way, guys, I collect $28.70 a share. That's almost a 7% return for 22 days. And the worst thing that'll happen to me is that I will own AMD, which I would have bought anyways. I would have bought this anyways at today's price. And this is why, to me, this is a game-changing strategy, because if you know you want to buy a stock, unless you expect some super explosive growth, then why would you not do it this way as opposed to agreeing to buy it? Sorry, just buying it. Why would you not agree to buy it? Agreeing to buy it and get paid 7% for the month, or in this case, 22 days? To me, that's a no-brainer. So we went ahead and bought that. We agreed to buy it for $450, okay? And I am more than happy to own this for $450. Now, let's see. Now, what determines this? Why do we get paid so much money? How come someone's agreeing to pay us $30 a share just for agreeing to buy this in for 450? Well, you could buy it for 450.97 right now. Why would someone pay us this much money just for agreeing to buy the shares? Well, the reason is because A, they are speculating that the stock will go down much further in the short term, in which case they have to pay $28.70. So if you took it 450 minus $28.70, the stock would have to go below $280. And I don't want to make this too complicated. It's pretty simple for us who are agreeing to buy the stock. But if someone wants to speculate and say, I think the stock's going to crash to $200 the next month, well, hey, great. I'm happy to take it off your hands for 450 because I think it'll be worth way more in the future. So that's where we are playing. So now imagine you get paid a lot of money for this no matter what happens. And the analogy that I'll give is imagine you had a house, and that house is worth $500,000. And you told the homeowner, hey homeowner, I'll take this off your hand for $500,000 in the next month, no matter what the price. And the homeowner gives you 7% for that. Well, 7% of 500,000 is 35,000. The homeowner hands you $35,000. And the worst thing that'll happen to you is that you'll have to buy the house for 500,000. But the point is that you would have bought it anyways. And if you would have bought it anyways, why not generate money on your phone every month? The worst thing will happen to you is that you're going to own what you agreed to own, what you wanted to own, which you've done your homework on, which you think will be worth a lot more in the future. That's the game changer. So, guys, when you learn how to do this, when you learn how to buy companies for cheaper than they currently are, and you get paid a ton of money for them, that's a game changer. So let's take a look at Amazon. Amazon is a company which we think is going to be big company because of their AWS. That is Amazon Web Services. And this is the whole artificial intelligence stuff. Uh, it's at 267. I said to myself, you know what? Same thing. Let's go June 5th. I wouldn't mind picking up for 265 because I've done my homework. I think it'll be worth a lot more in the future. Well, here we go. I'm going to agree to buy it for 265, and I'm getting paid $5.80 a share. That's over a 2% return for 1 month. So this one, AMD, was a 7% return for 1 month. Okay. Amazon is not quite as high. And the main determinant behind that is something called here, as you can see here, if you look at the middle of my screen, right under dividend amount, is called IV last. That is implied volatility last. What that means is the more a stock goes up and down, the more that you will get paid on it. And generally speaking, when a stock goes up and down a lot, well, hey, the more that the insurance will cost to guarantee a price. Now, again, we are the insurance providers. So I don't want to make this overly complicated, but it's quite simple. This number here, 67.2, that means that this stock goes up and down a lot. So if it goes up and down a lot, for me to guarantee a price of 450, I want to get compensated a lot. And I'll tell you why, okay? So if you look at the stock price here on March 30th, if you can see the little pop-up box on the left-hand side under PX, well, AMD was trading for $193.68. Now it's gone all the way up to 449. That means it goes up and down a lot. And when it goes up and down a lot, this implied volatility number goes really high. When that implied volatility number goes really high, that means if you agree to buy a stock, well, you'll get paid a lot of money for it. So the higher that number, the more that you'll get paid. Now, that could be a very good thing, but that could also be a very bad thing. So if you don't pick the right companies to invest in, right? So there are companies that you invest in that are, just wind up being awful companies. And what I want to talk about is, you look at companies like cannabis companies a few years ago. They have gone terribly wrong. And I'm just looking at a couple of companies here that I'm looking at here. Let's take a look at Microsoft. So cannabis companies a few years ago, when cannabis became legalized, they were going through the roof. But like I said, ultimately, what drives the stock higher or lower is the amount of money that company makes or doesn't make long term. It's not just roulette, randomness. It's not. That's what a lot of people think the stock market is. It's not randomness. What it is if a company, then here's what we're talking about Microsoft, huge company. All of us probably use it in our daily lives, whether you use Excel or Word or PowerPoint or whatever it may be. We use it on a daily basis, probably all the time. Now, Microsoft, been around for a long time, okay? But Microsoft here has gone down a bit. The reason we don't mind is because even if our stocks go down, and stocks do go down temporarily, and if you pick the right company, they should go back up. But even if it goes down, well, hey, we got paid a lot of money to buy it. And that's what I'm trying to say. So you can generate money on your phone every single month. As long as you have the capacity to do so, if you have the money to do so, you can generate a lot of money. Now, if we say to ourselves, and I've done a call on this, if we say to ourselves, you know what, hey, I wouldn't mind getting rid of my AMD shares here. And I've done a video on this literally last week. Take a look at this. I'm telling you guys, this is a game changer strategy, guys. Game changer. If you learn how to do this effectively, it will change your life financially forever. Right? So now AMD here is trading for $449. And I said to myself, you know what? I've done my homework. I think AMD will be worth a lot more, but in the next 22 days, I don't think it's going to be worth more than, let's say, $500 a share. Well, as you can see here, for $500 a share, if I'm agreeing to sell my stock for $500 a share, I'm getting paid $13.05. Now, if it goes to $600 a share, I still have to sell for $500 a share, but I keep the $13.05. Sorry. Now, if it stays below $500, I still keep $13.05. That's why, guys, this is such a game changer strategy. When you can learn how to make money on your phone anywhere in the world, anywhere, and the worst thing that will happen to you is that you'll own a stock that you like. That's a huge game changer. I want to go back to this AMD example, Advanced Micro Devices. I simply want to pick this up for $445. We did a 450 trade, but I want to pick this up for $445 or 450. Even if it doesn't go below 450, and I don't have to buy the stock, which is fine. Still keep the $28, $29 a share. That's a game changer. 7% for 1 month. No matter what happens, whether I have to buy, whether it goes below 450 or it doesn't go below 450, I still keep that 7%. That's a game changer, guys. So, guys, follow us, like the video, comment if you have any questions. I look forward to hearing from all you guys very soon, and happy trading out there. Take care. Bye-bye.